welcome to the video. Today we're going to be doing an analysis on two different tickers, two of the top names from last week and for this week especially. So, a little update on Tesla right here. We did have a nice breakout from our massive wedge. I believe I posted a video on this consolidation wedge when it was inside that wedge for a while, and I was expecting a massive explosion once we break this, and we did that exactly from that S&P 500 inclusion news, and has been up over $200 plus since that news. So right now, what's the plan right now? So a couple different things here. We have hit our resistance at 607.8, but we did have a body close. The highest point at 601.8 right here, and in order to break this high right here on a body close candle, we need to break the 601.8, and then we can see a push towards my 618.86, and we'll see nice gap up towards 652.47. And also, while we are consolidating inside this wedge right here, we have been fading a little bit on volume, which you can see right here on my daily chart right here, but that is because we are setting up in here. So basically, consolidation phase, volume starts to fade, and professionals, institutions, banks, etc. They don't want to trade that because they know that they should only trade breakouts, which is the purpose of trading, the right way to trade, especially. So in my opinion, we will go heavier once we break the 601.8, and we did touch that last Friday with a high of 602.69, and we got in around 596, I believe, and it just went up right after we bought, but it was supposed to be swing, so we haven't sold yet. But hopefully we break that 601.8, and we see at least above 605 at least, so that, just so that our calls can be safe. But swing calls above 601.8, and we'll see breakout above for these two price targets up here. And we do have some downside possible, but we never know what can happen because, all the news, Elon Musk, just talking on Twitter back and forth, always saying something stupid, and it'll just go down, right? So the backup plan, in case 601.8 doesn't break and Tesla goes down, we have a possible gap down. A little one, not like something crazy. So right here we had a gap up last Wednesday, Thursday, Friday. So we had a gap up between Wednesday and Thursday. So we had a little gap right here. So if we lose my 582.43 support right here on the daily close candle, if we get that full candle below my 582.43, we can fall back to my 568.82. which I believe can bounce off there and come back up so that we can create a consolidation phase right there, and it will push back up higher. On the weekly chart, it is telling me that it's not done. It doesn't want to stop right here. The momentum is, it's gaining. The volume is going a little, it's picking back up. It's not in the overbought area, so it's a lot of room right here still. We could possibly see 700, who knows, but my stock to our side is nowhere near the overbought area, so lots of room upside in my favor. The indicators. So backup plan: if it breaks 582.43 points down to 568.82. If we break 601.8 on the daily, we can see 618.86 and 652.47. Okay, write that down. Copy my chart, and you will have it down. Next one is going to be Boeing, which had a quiet day last Friday. This one also did really have a nice breakout once we broke that wedge, which I told you guys to be patient. Once we break this 222.7, and we did that finally, and then we got into calls. This is where we made a ton of money right here last week. And then it started slowing down because of some rejection zones right here at 241.78. I am not done with this one yet. I still have my my position on this one for a little bit long term because we need to break this 241.78 But most importantly, we need to break 237.47, which is the major daily resistance because of the body close candle right below it. So once we break this 237.47 on a daily candle close above it, we can start to fill in the gap all the way to 253.28. So between my 241.78 and 222.7, we could consolidate for a bit until we start to get into that oversold area on my daily, and then we'll start picking back up. One thing is I would buy dips off my 222.7 support for a bounce back up to the high 230s, mid 240 possibly. So only one plan right here. Breaks above 237.42, 47. We can start to fill in the gap towards 253.28. So I'm gonna get rid of this 241.78 for now because I'm only focusing on my daily chart right now. So you can fill in that gap right here. So last Friday, inside day, nothing bearish right here. Just another day of trading. Weakness right here, but in my opinion, we'll see that 237.47 break, and we'll start to fill in the gap. We're only $5 away from that break right there. So be patient on this one. We made money off this move, so we don't need to. We can't expect things to go up higher and higher and higher, right? We can only expect a couple days or 3 days, 4 or 5 of going up, pull back, get the consolidation phase or box zone, create that, then get that low volatility, set up squeezes, fire it, and we'll make money again. Okay, so be patient right there. We need that 237.47 break for a daily close above it, and we'll see that 253.28. Okay, so easy stuff right there for you guys. I'll see you guys in Discord. We'll be trading every day, 5 days a week, and I'll see you guys there, or on my Facebook as well. I hope this video helps you guys understand technical analysis a little bit better, price targets, and what's going on with the 2 top takers from last week. I'll see you guys next video. Thank you for watching.